Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway. Today's date is Tuesday, May 23rd, 2017. Well, folks, right off the bat, let's take a look at the S&P 500. This is the SPY, which again is the S&P 500 tracking ETF. The intraday chart, you're looking at the 10-minute, being each candle is 10 minutes long. And clearly you can see the markets are just dead today. We're gently floating higher, now up 56 cents on the SPY. What's important right here, though, and this is very important, is we have officially filled the gap from the big down day last Wednesday. So this is where Tuesday closed. This is where Wednesday opened, and we had that big sell-off. Since then, we have slowly worked our way back up. Today, right now, literally right now, we have officially filled that gap. Now, on a normal market, this would be resistance. This is where investors who got caught with their pants down going into Wednesday and were down huge on trades on Wednesday, they're now just getting back to even. So oftentimes you see the market see some selling pressure here because people are saying to themselves, oh, thank goodness I'm back to break even. I'm just going to get out right now. I don't trust this market. But the bottom line is that's not the case, in my opinion, in this environment because things are so bullish. People believe every dip will get bought, and this is just one more example of buy the dip mentality working out perfectly, that I don't think there's going to be much selling. I think anyone who was long right over here last Tuesday is now back to break even, and they're saying, okay, great, now the markets will go to new all-time highs. And in all fairness, considering we're coming into a holiday weekend, it's very possible that might be the case. Very, very possible. So we'll see again how it works out. But bottom line is, look at the markets now starting to inch up, starting to move higher here. And again, I expect this market to go higher. And again, we talk about holiday weekends. Holiday weekends usually mean you float up into that time frame, you float up into that level. And that's exactly what I'm expecting, new all-time highs by the time the weekend comes. It's a 3-day weekend, remember, holiday action, so volume should be extremely light today, probably getting even lighter by Thursday and Friday of this week. So again, that's what I wanted to cover. And again, I think it's very important for people. Normal markets, and this is very good and important, normal markets, you would see resistance here. You would see the market selling off here. You probably do not see that in this environment. Volume's too light, and the markets are too euphoric. Doesn't matter. I mean, the crazy thing about it is 5 years ago, 10 years ago, whatever, you would get a terrorist action like we saw in Manchester, England, which is just horrific, and you would see the market getting hammered today. Getting hammered. The market was down. The futures were down a couple points last night after the event occurred, and by this morning they were up, and we've just gone up since then. So again, it shows you a market that is disregarding anything and everything. The only thing the market is focusing on, and by the way, even Trump's nonsense, all this BS on Russia and what's going on there, and the craziness in that respect, all these new headlines that are breaking almost daily at this point, you would think that they would be a problematic issue for the market. They are not. The market doesn't even care about tax cuts right now. All the market cares about is the economy, because the economy is on sound footing. As long as the economy and economic numbers stay strong, this market, again, is likely to grind higher. Now, at some point, we will get a crack in that. At some point, you'll get a string of economic numbers that show weakness, and the market at that point will freak out. But honestly, I wouldn't expect it before Memorial Day holiday weekend coming up. All right, guys. Bottom line is, understand your gap fills, normalizing in a normal market what normally would happen than what obviously we're in right now. And that's the best way you can learn how to invest and trade. Take care.